Well, single stock ETFs have exploded onto the investing scene, offering traders a high octane way to gain leveraged or inverse exposure to individual companies like Tesla, Nvidia, and Apple, along with many others. In just a few short years, these niche products have grown rapidly in popularity, fueled by both excitement and debate, by allowing investors to amplify their bets on single names without having to use a margin account. But with greater potential reward comes greater potential risk. So let's dive into what's driving the surge in single stock ETFs. We've got Dave Kreinces with ETF Portfolio Management joining us. Dave, great to see you.
Ronnie D, nice to see you, my friend.
So let's dive into what's behind the single stock ETFs and what investors and traders need to know. Let's begin with what are leveraged bull and inverse single stock ETFs? High level.
Well, levered and inverse single stock ETFs are basically new power tools that give experienced investors the ability to express their market views more dynamically. They basically use derivatives to simulate 2 to 3 times levered exposure, or actually with individual stocks, just 2 times levered exposure to the long side and 1 to 2 times short on the inverse. Most importantly, they can be very surprising at times with huge upside and downside risks. So investors should be extremely careful whenever using leverage, especially with position concentration.
So let's examine a case study example of the Netflix pair of ETFs from Direxion. You got NFXL and then NFXS. So what type of trader or investor might each of these ETFs appeal to?
So Netflix is a leading innovative company, and NFXL is 2 times long exposure to Netflix, while NFXS is 1 time short. Now, these funds haven't been around long, and the nature of the volatility can significantly impact the return. You can see on this 9-month chart, Netflix was up 77%, and the 2 times version gave you more than double, while the 1 time short fund only fell by 47% and not the 77% you could have expected. So this is all part of the performance deviation you could get depending on the nature of the volatility during the time frame. During this time period, the underlying asset, Netflix, was mostly positive and upward.
Yeah. Now, besides an investor or trader who might be, let's say, bearish on an individual stock, are there any other use cases for the leveraged inverse stock ETFs?
Well, in addition to tactical investing and speculation, we believe there is a case for using these funds for tax efficiency and cash management. Anyone who wants to have a cash reserve invested could use leveraged funds to increase exposure in a Roth IRA. So levered funds present an extremely wide range of uses for a wide range of investors, and that's why they've attracted so much in assets. Still, these tools are really for experienced investors. Over the past 9 months, looking at strategy, MSTR, and the 2 times version, MSTU, you can see the leverage worked extremely well during the strong up period and quite badly in the down and sideways periods. So investors should be extremely careful using leverage, and even more so with concentrated positions. And one other example to highlight is Coinbase, which I know you love, Ron. This chart shows over the past 2.5 years, the 2 times version CONL, CONL, performed extremely well during the strong up periods and not so well during down and sideways periods. This means you only want to use levered long single stock instruments in strongly trending positive markets for the underlying stock.
Now, I know you've also, Dave, been a proponent of the NASDAQ 100 and crypto ETFs linked to Bitcoin for quite some time. And besides that, do you think single stock ETFs will eventually play a bigger role in portfolio management? How do you see it?
You know, while leveraged single stock ETFs are game changers, the leveraged index ETFs and Bitcoin are much bigger innovations. Still, you can think of leveraged single stock funds as the cherry on top of a dynamic new investor toolbox sundae. Together, these instruments enable investors to target much higher returns and sometimes with much higher risk. In fact, 2-Times Strategy MSTU actually delivered more than 900% over 9 weeks last year, and then quickly fell by 50% over 4 days. And recently, as you know, we have been allocating to Robinhood via HOOD for unlevered exposure and the 2-Times version ROBN. And over the past 3 months, the 2-Times Robinhood ROBN actually gained 137%. So this is a new era in ETF investing.
So you have been using the single stock ETFs inside portfolio management. Of course, selectively, you have been using these products.
We have. We've used Nvidia in the past, MicroStrategy, as well as Robinhood, and even Coinbase at times.
Well, that's very, very revealing. And it just, like you said, it speaks to the innovation that's happening in the ETF marketplace, and then also adapting some of these power tools into your overall strategy for hopefully a happy end result. Dave Kreinces, great job. Always wonderful to see you. Thank you for taking the time to be with us today.
Thank you, Ron. Happy summer, everyone. Stay cool, people.
That was Dave Kreinces with ETF Portfolio Management. Hit us up in the comments section below. Would like to hear from you. And for those of you watching for the first time, be sure to hit that subscribe button. I'm Ron DeLegge with ETF Guide TV. We'll see you on the next episode.